Hello, everybody, and welcome to day 5 of the Forex trading journey. Hope everyone has had a beautiful, amazing weekend so far. And today we go ahead and we continue from where we left off. And so, what we're going to go ahead and do is just take a look at our stats right here. Again, we want to make sure that we are documenting this number right here. Let's pull that up. This number right here. Make sure that we always get that on the start of today's journey, because equity, again, is our fuel for this whole experience. And I'm going to go ahead and put this at about $118.25 just to be on the safe side here. So let's go ahead and let's write that down. And what we're going to go ahead and do, because we don't necessarily have a trade to work with right now, we could definitely see that before my session, right? So I'm following discipline right here and not chasing the trade that's already happening, mind you. We see here that this buy signal came in right around just taking a look, right a little bit before 4 a.m. my time. So that myself, I will not get into because I am not up at 4 a.m. my time to trade. I am only up from about 5 a.m. to 10 a.m. my time. And that's important to know exactly what you're trading, and strictly follow to that. Do not chase the trade that came before. No, otherwise we are not going to have as optimal results as we can. So, with that being said, we're going to go ahead and since we do not have a trade that we can take advantage of, there are a few things I want to go ahead and point out today as we move forward throughout our journey together. And I've talked about it before, but I also want to go ahead and emphasize the importance of indeed creating a demo account. Okay, so I want to go ahead and get the internet going for me. And I am going to open up hugosway.com. This is the, excuse me, this is the broker that I use in particular, or what I have been using. We can see that this says Hugo's Way right here. This is the broker that I have been using in order to take trades on the market. In order for us to do our Forex journey. Now, you can open your own account by going over to here or even going to here in order to sign up for it. What I'm going to do is, because I already have my account, I'm going to go ahead and just click the login button. And maybe I should pause this screen right here. You don't need to see me typing in my thing. Okay, now that we are into my back office, mind you, I'm going to go ahead and go over to my accounts. Go ahead and refresh right here. It's always going to give me the real-time statistics of what's going on in my account so far, based on the on this particular program right here, just so that you're aware whenever you open that up that it should match up what you see right here, depending on your choice broker. So what we're going to do is we're going to go to my account type, and we're going to choose Hugo's Way MT4 demo. I'm going to have my account leverage as 500, and I'm going to start with a virtual balance of $100. Now, the reason I say we're going to do that is because right now, as we can see, our balance is about $118.27. Again, I'm going based on the equity, right? And in order for me to determine the best strategies, the best tests that I need to do in order to help my account grow, I always want to make sure that I'm using a balance that is very similar, very close to the actual money that I have put up. So $118 in this case is my balance on here. So we're going to do a virtual balance of $100 right here. We're going to click on create account. I'll have this success account created successfully pop up, the one that my mouse is hovering on, or just disappeared. So now that that's done, what I'll also go ahead and do is I'll show off how to download the MetaTrader 4 version itself from the website. And so to do that, we go to downloads, we go over to, now it's going to be dependent on the operating system that you have, but because I have a Windows, I'm going to do MT for Windows. So if you do have a Mac, you may need to ask someone for help with downloading the MetaTrader 4 version for your Mac computer. Again, this is only going to be for a Windows demonstration. Click on yes. So let me explain. So I already have a Hugo's Way set up. So I already have a Hugo's Way MetaTrader 4 terminal. So what I'll have to do is I actually need to go to settings. I need to click on browse. I'm sorry, no, not browse. But here I'll actually need to change. I'll have to come over to the end right here and just put a 1 right here. So if you ever wanting to install multiple programs, multiple instances of your MetaTrader 4 terminal, just make sure you come into settings and you left click on settings. So again, we're going to left click on settings right here. Make sure that we at the end you put a parentheses 1, or if you're doing 3, put a parentheses 2, or 4, 3, etc., 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 etc. So we'll then click on next. Then we'll click on finish. Get this away from us. Need to wait for the program to come aboard. All right, and here we go. Okay. Now, because we're doing a demo, as we can see, there are 3 options right here. So we're going to select Hugo's Way Demo 3. Now, what I'll need to do is pull up the information that I need in order to log in, and I'll show you how to do that. So I come over to my email now. And I'm going to look at my new demo MetaTrader account created email. From here, I'll see that there are 3 things I need to pay attention to. This Hugo's Way Demo 3 number right here, the demo account number that I've highlighted. So let's do that. And then I will need the trader password. So I'll copy that, paste that right here, click on finish. And now I can go ahead and use this particular instance in order to trade. And then you'll also get a new incoming voicemail message and make sure that everything is logged in properly. So what I'll need to do now is I'll be right back and I'll show you specifically what we're going to do on here. Okay, everybody. So I'm going to go ahead now and choose, just taking a look right here. Okay, no trading opportunity as of yet for our live account. So I'm going to come back over to here and we are going to choose a symbol that we are going to practice this particular strategy on. Now, the reason we're doing this, right? The reason we're doing this is before we go ahead and we put a pair onto our list to trade on our real account, it's smart to first test this particular pair out on a demo account, make sure we can still use the same rules on it. So we test it out for about a week. Then once we have a successful test, we can go ahead and then put that on the live account. So let's go ahead and let's choose a symbol that we want to use. Let's just take a look at metals. So I already have gold right here on the US dollar versus gold. So XAU USD. So we don't want to necessarily use that. So let's try silver this time. So I choose silver by going to view. I left clicked on view. Okay. I left click on view. I left click on symbols. I left click on this plus sign right here next to metals. I left click on XAG USD. Now, this is what it looked like when I first opened it. So what I have to do is left click on show. And then as we could see, this gray dollar sign right here changed to a gold US dollar sign right at the next to XAG USD. We click on close. Now we take a look at our market watch, and if we scroll all the way to the bottom, we'll see our symbol right here, the XAG USD symbol that we need. I'll left click on the symbol right here. I'll right click so I can bring up this menu, left click chart window, and then we put this on the, let's do the 5-minute time frame, just like we have gold. Make sure we have the candlesticks on by left clicking on here. And we selected our 5-minute time frame right here. Now, for those who are wondering how I got this to a full screen, I went ahead and I left click on this. I could either left click on the square icon right here, or I could double left click on the border frame and it will change it to a full screen. So now what we'll do is we'll put in our pieces right here that we need, or that I need, I should say. And we'll zoom this a little bit so I can see everything, just like that. Then we'll put our, then I'll put my indicator on here. All right, now this thing is ready to go and ready to trade. So we'll do the same thing here where we will go ahead and we'll look for opportunities. Now, again, if we want to bring up our trading panel, that was simple to use for the other account that we're using. What we'll need to do is we'll have to left click on tools, left click on options first. Make sure that one-click trading is check marked. We accept the terms and conditions. Left click OK. Then what we do is we go over to then we right click on the chart itself and then left click, one-click trading, and boom. We adjust our lot size right in here. So we can see right now this is 1.00. So all I'll do is, because again, for silver, we're going to follow the same rule. And again, that rule is for every $100 in my account, we are adjusting the lot size by 0.01. We always practice on the demo what we are going to do on the real account. I'm going to write that down. Trade in the demo the same exact way, in the same exact mindset that you trade on your real account. Otherwise, there's no point. Otherwise, the purpose of the demo account, you're not going to use it to its most effective means. So we're going to go ahead and put this at 0.01. And now this account is ready to go, ready to start trading on the same system that we have for gold. So the only other things I want to talk about right here while we wait for while we wait for our live account for any opportunities right here again. And what we'll do is we're going to cover both the demo and the live account as we move forward right here. But while we wait for some opportunities, I'm going to go ahead and explain what our sell panel is right over here. So I know I briefly talked about it, but I want to also illustrate the use for it. So again, we have our sell button right here. This is how we can go ahead and execute sell trades. We have our buy button right here. This is where we can go ahead and execute buy trades. And then we have our lot size marker right here, which is right now at 0.01 or 10 cents per pip if you'd like to call it that. So what we can do right here is we can either, for putting in the lot size, we can either type it into right over here, as I did before, or I could use the down and up arrows in order to give me the appropriate lot size. So those are two things that you can go ahead and use in order to adjust the lot size, and then of course, sell buy button. And then again, just looking at time frames right here, if we go over to the 1 minute time frame, we can see that there are a few more signals. There are going to be a few more signals because now you're looking at the what I like to call the account on a shorter time frame. But what we also want to understand is that because we're looking at this on the 1 minute time frame, the opportunities that we have are going to be a little bit more inconsistent because the candles that we're looking at that will help us determine how we use our market structure strategy combined with the scalper arrows. They're not going to necessarily work as well. They're not supported by as much data as a 5 minute candle would. And then of course we could go higher. So, this is an example of what is trading on the 15-minute time frame. So all these candles representing 15 minutes of time. Each of these units representing 15 minutes of time. We can use that. We could even go to the M30. 30, each candle representing 30 minutes, the 1 hour, and etc. However, we also have to understand that the trading aspect, what we're trading on, is we're only doing this for about 5 hours. And if we're doing this from about 5 a.m. to 10 a.m., Monday through Friday, that's our prerogative. Then to make sure we use the most amount of time possible. So the objective right here when we're doing the strategy, and again, we're doing this on the demo account first to make sure it does line up or if we have to adjust. But the main goals of testing right here, find a strategy that's consistent. And also with that strategy, find as many opportunities in the quickest amount of time possible. And again, we keep to the same principles of we got to make sure what our risk management is. We got to make sure how we enter, how we exit. We keep all this in mind, but we also, in order to compound our account in the most efficient way possible, we also want to understand that by doing this, we are looking for more opportunities to grow our account so that we can get to where we want to be in the shortest amount of time possible with this strategy. And I would say that Tony Robbins has always said this best. We are looking to turn for me, my 2 years of experience, I want to go ahead and make that instead of 2 years for you, 2 months, 2 weeks, 2 days. I don't know. I don't know if we can get to that point, right? But the objective is to make sure that your time watching me, based on the amount of time I've had in the market, we can go ahead and get that reduced for you. We can go ahead and we can cut down how long it takes to trade in these markets for you. All right, everybody, we are back at it. So I just want to go ahead and show off what transpired while we were away from the call. As we can see right here, I had missed this particular opportunity to trade. Now, as far as that missed opportunity, once again, we don't worry about that. We go ahead and we move forward. Now, as we can see, there was a arrow right here, or we have an arrow on this particular candle right here, and that arrow came from this particular this arrow moved to this candle right here from this particular candle. I wish I could have recorded that specifically. However, I can tell that was the case because looking at our market right here, I noticed that there was a support line that price was touching right at this particular marker. And so when that price point touched, that was when price came, or this arrow would have displayed right here. And because there was a low point, because this particular candle had a wick that was a little bit lower than this wick right here. It's a very minute piece of data, but this does have a lower wick, and we're going to talk about candle structure here in just a moment. But this essentially had a low point, and this made a lower point than that, and then the arrow transitioned to this candle, and that's where we find ourselves in this particular trade right here. Now, I am going to be jumping between these two pairs right here again, just to show off the strategy for what I'm doing. But so far, we've got into our first trade of the day, so to speak, taking this particular trade right here. So other than that, I do want to talk about a few other things that will appear on your trade order, besides understanding that you are yourself, you're in a trade, this is how much profit you're making, and this is the time that we have been in this particular trade. Now, there's a lot to cover here, and I'm sure we're going to be able to break this down piece by piece, bit by bit as we move along. But I definitely want to go ahead and at least cover the things that absolutely need to be covered. So first, I want to go ahead and talk about commissions right here. So let me go ahead and circle that. Now, for brokers, or depending on which broker that you trade on, you're always going to have a commission posted right here. Now, this commission is based on my understanding and based on the 3 brokers that I have traded on primarily, there is always a fixed amount when it comes to these commissions, and it's always based on lot size. The idea, let's say, behind Hugo's Way, right? So let's go ahead and let's stick to Hugo's Way. That is the broker that we have traded since day one on this journey. And I want to go ahead and pay attention to that specifically. Now, commissions let's go ahead and let's write that. Commissions are a fixed amount that Hugo's Way, the broker, charges on a trade. And I'm just waiting for that candle close right there so we can add in our second entry. So now this particular commission, okay, hold on, let me just do this. Okay, we're going to place another buy right here. So now I am in 2 buys. I am in 2 buy trades right now. We could tell that I'm in those buy trades, by the way, based on the margin. Again, the margin is what's determining if the equity is going to go up or if it's going to go down. But we could see right here that I am definitely in a buy trade. Okay, let's just make sure we have that down. And again, I'm also making sure that I am looking at the most recent of my orders, the most recent orders that I had placed, by making sure that this time arrow is pointed in the up direction. So those are my 2 recent orders right now. So they're in a little bit of a profit. And again, whether they stay there or whether they go in the opposite direction, we know our plan. We know our plan for how we want to go ahead and adjust to all that. Now, let's come back to the commissions. So first, let me move this. So again, commissions are a fixed amount that Hugo's Way, the broker, charges on a trade. Now, this amount, the amount of the commission, is dependent on the lot size primarily. Now, as far as it's based on anything else, I have not tested it on the live account yet on other pairs. So as we move forward, these rules may change, but right now, our focus is to pay attention to it based on the lot size. So let's take a look at gold, for example. Now, gold, we could see that every commission that is on my open trades right now, that is minus 5 cents. So for every lot size, or for every, let's write this down. For every 0.01 lot size that I trade, or that I place in open trade on, the commission for that trade will be at 0.05 for gold. Now, whether that rule changes, that is something that we're going to learn together, both you and I, as we move forward through this journey together. However, just focusing on gold, we can see that I just placed 2 trades. So we just placed 2 trades today. And so already Hugo's Way has charged me 10 cents in commissions for those trades. And so another way that we can look at this is Hugo's Way will charge me 1/2 of a pip for my lot size. I'm sorry, we'll charge 1/2 of a pip based on my lot size per trade. Now, how come I bring this up? How come I bring that up? It's because, right? It's because 0.01 lot size, that equals 10 cents per pip, right? And so if Hugo's Way is only charging me 5 cents, that is what equates to 5 cents. You know, if 10 cents per pip equals a 0.01 lot size, then 5 cents per 1/2 of a pip, okay? So that would be 5 cents per 1/2 pip. And that is what equals this commission part right here. So we know that in our goal, our objective, right? If our goal or objective is to get 30 pips, I've stated this, I believe, on day 2, day 3, or day 4. Actually, I remember it was mostly day 3 and day 4. But if our objective is to get 30 pips per trade, then our commission, which is the 5 cents per 1/2 pip, we certainly don't necessarily have to worry about that eating into our profits a whole lot. It just goes back to ratio. You know, for our profit, we would get about 60 times that commission Hugo's Way is charging us right back into our account. By if we indeed close our trades at that 30 pips rule. Now, the other thing that we do want to pay attention to, besides commission, is we also want to pay attention to swap fees. Now, swap fees are fees that Hugo's Way, again, the broker, will charge if we decide to hold on to our trades for more than a day. Now, that definition of more than a day is based on, let me make that arrow. Let me delete that arrow. Yeah, let me delete that arrow. I want to actually just make it a little bit bigger so that we have enough space to write this down. There we go. Now, those swap fees are based on a trade opened past the, let me just get that out of the way so we could see that arrow just turned into a buy, which means our trade is moving forward in the right direction. Now, going back to swap fees, if our trade is open past the 3 p.m. MST hour, which that's my time zone, Mountain Standard Time, so that would be 5 o'clock Eastern, 4 o'clock Central, 2 o'clock Pacific. If a trade is open past that, then that's where those swap fees would incur. Now, I don't have the exact number, mind you, but normally per day, you get swap fees charged, and this is important too. You get charged these swap fees. Write that right here. We get charged on them per day. So if we hold on to a trade for, let's say, 2 or 3 days, then you get a swap fee charged every every day for 2 or 3 days. And so that's important to understand, especially with our strategy, because we understand that our trades can potentially be held on to for more than a day, more than a couple of days. And so that will affect what our equity is. So all this, why it's so important to know. So this, and this, all this is just a web going back to this guy right here, our fuel equity. So understanding this, understanding the commissions, that all helps towards understanding how equity works with our trading. And as we have previously stated, equity is going to be the main source of how we are able to stay in this particular market. So it's very important that we understand what commissions are, what swap fees are, and this isn't going to be the last time necessarily that we talk about it. We're gonna keep talking about swap fees and commission fees throughout this journey together, because it's important to understand where I'm at, where the journey is, and how certain things come to be. And it's important that we keep ingraining the lesson, so that not only do we understand, but now we have a confidence if we desire to. Well, not everyone wants to be a teacher necessarily, and that's perfectly okay. We all have our own paths in life. However, if we do want to teach this particular strategy, then it's important to know all the concepts. And even if we want to practice this strategy, it's important to know all the different concepts that we need to make ourselves aware of. And don't mind me, I'm just taking a look at silver. And I want to show off those trades as well, so that you understand exactly what I am doing on this journey in order to serve everybody that's watching. That's very important to me. And so I also want to go ahead and talk about the concept of cost averaging a little bit more. Now, I know I talked about it briefly the last week. However, I do want to get into it a little bit more specifically and how it all works. So as we remember, the reason I placed my first trade, and again, this pertains to my own strategy. There are, of course, multiple different ways that you can look at cost averaging, how to do it, but we're going to talk about specifically what I do, what my strategy is. So I understood that our first candle right here, this guy right here, the big candle that went kaboom, this particular candle was the one that produced the first buy arrow for me. And so because I knew that particular candle produced the first buy arrow for me, when that candle, it didn't necessarily close right at that place, mind you. I went into it a little bit late. Again, that's on me. However, what I understood was, okay, it broke this particular support. That's the reason the arrow came into being, was because we are right now on a buy trend. We're in a buy market. We know that we are in an uptrend. And we know that this is a support. Now, based on this candle right here, this support was created 5, 10, 15, 20, 25, 30, 35, 40, 40, 45 minutes ago, 9 candles ago. And again, on a 5-minute time frame, the candles represent 5 minutes of time. So if this candle was created 9 candles after this candle, that equates to 45 minutes. 9 times 5 is 45. So understanding that, we get into the first buy trade. Now, after that, the next candle came in and made a lower point than this candle right here. Here, let me clear all that up. This candle created a lower point than this candle right here. Now, how I can tell is, let's navigate towards those candles right here. And let's pay attention to the first one. The first one that this one, okay. Here I gotta circle everything again just to make sure we're and I trust everybody. You know, I make a lot of these just because, you know, I want to be triple sure that I'm having you look at the right thing. Like I don't doubt anyone's eyesight, I don't doubt anyone's judgment, but I know how important it is for me to point all this stuff out to someone that just needs to see it a little bit better. And that's absolutely perfect. Okay. So this candle right here, we understand the first buy arrow came about because it broke this particular support right here for just a second. Even though we were in an uptrend, so that was telling us that this particular candle could be the one that produces the higher low. Again, for buys, we tend to look at a bullish market structure that comprises of higher highs and higher lows. And so understanding that, coming back to the other candle, I'm just paying attention to this one as well. Gotta make sure I am. But coming back to this now, we understand that we took this trade right here because of the support. Now, if we look at the low point right here, right? So I want to make sure I'm dotting this one right here. This is the correct one. So if we look at the low point right here of this candle, which was created at around the 635 mark, which makes sense because this candle had to close for this candle to open at the 640 mark, which documents my first trade being a minute into that candle's opening. Here, and just to give you what I mean by that. So this candle came in at 6:35 a.m. MST. All right, let's put an arrow right there. Boom. Now, the next candle came in at 6:40 a.m. MST. Let's move that right here. Now, the other candle that came in now after, oh, hold on. Now I gotta, now I gotta move the arrows a little bit just because time moved, and that's perfect. All right, there we go. Just a slight fix there. So this came in at 6:35. This came in at 6:40. My first trade down here, which was based off of this candle, the 6:35 candle, came in at 6:41, which would have been based on this candle, the 640 would have been a 1 minute into its opening. So this candle would have still been open and moving around just like our present candle is. And so that's what the first trade came about, was because of the first candle. Now going back to the 640 candle, let's talk about the reason for the second trade. So this point on the 635 candle, the low point on it was, just a second here, there we go. The low point on it was 1727.03. So write that down. Low point, 1727.03. Let's draw an arrow in that candle. Now the low point is the wick. See, within a candle, you're going to have four different parts to it. You're going to have four different parts of a candle. The first part is the open. Second part is the close. Third part is the high open, and four is the low open. So let's break down those parts right there. So the open of the candle is essentially the point that price started at when the candle was first open. And so we look at the 6:35 a.m. candle, and we understand that this was a bearish candle. Now, for my eyesight, the white candles are the bear candles, and the black black candles are the bull candles, the where price is going up. So if the white candle is a bear candle, that indicates that price went down on that candle within the 5 minutes. So for our open would be located at the top right here. So right around the 1730.42 marker. So we'll write that down. 1730.42. Now for the close, we look at it right here. The close is when the candle closed itself at 6:40 a.m. Again, this is a 6:35 a.m. candle that we're paying attention to. The closing of this candle would have taken place at 6:40 because that would have been the end of the 5 minutes, and we would have been able to then move on to the next candle. So our close would be right where price would leave, or price would end up at 6:40 before transitioning to the next candle. So understanding that, and all we're doing for the open and close is looking at the body of the candle itself. There are two parts to a candle, so we'll write that. 2 parts to a candle. Let me close this out. 2 parts of a candle. 1, the body, and 2, the wick. Now, I don't mean to sound like Captain Obvious if you know this already, but I also understand that we are all at differing skill levels, right? You know, some of us have come into the Forex market world as experienced, knowing what a candle is, but I know that some of us are brand spanking new, and they're looking at this like a foreign language, right? Some of us don't know what any of this is, and all I want to do is point out what I know so that it becomes a little bit easier for you to digest. And the perfect part, if you need to rewind this, fine, do that. These are recorded. So I don't want anyone to feel like they are overwhelmed or feeling left behind. I don't want that to happen to anybody. So we have to cover all this. We must cover all this. We can cover this. Okay. So the body is really the big candle right here, like the big rectangle. The rectangle of a candle represents the body. Now the wicks, they're represented by the lines, the vertical lines. So you can see on each candle that beyond the body, right? So let's get rid of this. Let's get rid of this guy right here. That's the one thing I think we don't need. Okay. So let's break down that candle, right? So we've got the body right here, and we've got the wicks right here. Now the body is what we pay attention to when we're looking at the open and close. So the body, we gather the open and close information off that candle. The wick is where we get the high open information and the low open information. And I promise I'm going to explain how come all this is important here in just one moment, but it's first best to understand what we're looking for with the candle. Sorry guys, I just want to put it somewhere where you can read that. Here's what I'll do. All right, ready? You need to pause it right here. That way you can write all that down. Okay, now that we've got that out of the way, Like I realized, I could just do that, have them pause, and they can take the notes from there. So do that, and here you go. So coming back to the can. So we understand that if the body is all we're looking for, so let's point out the rectangles. So we don't even need the circles right now. Okay. We're just going to delete you. We're going to delete you. So just look at the rectangle, right? So we've already talked about the open of this candle because it is a candle that started from a high point and fell down to a lower point. If we pay attention to the rectangle, here's our open up here, and here's our close down here, which for this candle was 1727.20. Now we could talk about the open, the wicks. So now we can grab this guy and we can delete it. Oh, hold on. Let me do this. Let me do this. Let me do this. Okay. We just got 30 pips off those two trades. 30 pips off of those two trades. How beautiful is that? Okay. So we were talking about the 4 different parts of a candle. And what we saw is this candle right here. We already put down what the open number was, and we already put down what the close number was. Now, what we want to talk about is the wicks, right? So let's draw them. Again, these are the wicks, the ones that look like vertical lines. Now, even though the candle closed with the rectangle, right? So we already knew, so we know from the open and close, we can tell the story of the 6:35 a.m. candle that it opened at 1730.42 and that it went down in price. So this can tells a story just with the rectangle, the body, the open and close, that started at 1730.42 at 6:35 a.m. this morning. And then at 6:40 a.m., it went all the way down to about here. And it closed at 1727.20. Now, within the 6:35 a.m. candle, not only did it do that, but it went, a candle doesn't necessarily just go straight down, right? But instead it goes up and down and up and down and up and down and up and down. And so, if I could, the candle, it's like a heartbeat. It goes up and down, 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 up and down. Something like that. Although a lot more pleasantly illustrated, visible on the candle, not just by looking at my chicken scratch drawing. But more to the point, we know that price hit this high point sometime within the time period of 6:35 a.m. to 6:40 a.m. And this high point right here is at 1731.69. So at some point within the 6:35 a.m. candle, it reached a number of 1731.69. Now for the low open, so that means we're throughout this period from 6:35 a.m. to 6:40 a.m. Mountain Standard Time, it went all the way down, went up and down, up and down, up and down, and the lowest point it went was at 1727.03. Right? And so now let's talk about the next candle. Now let's talk about the next candle. So let's get rid of all this information right here, right? So we don't need that. Now we're going to talk about the next candle and what about it led us to taking that second trade that we just won. All right, everybody. So I wanted to come back into the market now. There were at least one or two opportunities that I missed, and not only on the real account, but also on the demo account that I have placed. Not to worry though, that is completely okay. We're not going to find every opportunity. We're not going to get into every opportunity. And with that being said, I know that if I myself cannot record myself getting into that trade and talking about it, I will not get into that trade. That is not fair to those that are just watching or just needing to know how to get this done. I need to go ahead and show exactly how all that comes into play. So with that being said, let's go ahead and let's review today's results, because that is the end of our day 5 journey together, ladies and gentlemen. And so if I go ahead and I take a look right here, here's our final number, $118.25. That's what we started today's equity on. And on today's ending, we have made it to about $124 and at least above 50 cents. So we're going to do that at 124.50 to be on the safe side. And what does that mean? Today, we have done $6 better today than we did yesterday. And again, as long as that number is pointing in the up direction, I don't care if it's a cent, I don't care if it's a dollar. If we did better than the day before yesterday, we are doing absolutely amazing going back to our culture of progress. So absolutely amazing day out in the markets. I'm glad we were able to catch in our opportunity that we were able to. And sometimes we're going to be taking a good amount of trades, and sometimes we only will just take a small amount of trades. And that's fine. Every day is completely different. We don't need to take trades when we don't need to, because all we're doing, we're not winning nor losing. We are protecting our fuel that's going to allow us to fight into these markets another day. So everybody, this has been day 5 of our Forex trading journey together. Very grateful to have each and every one of you on. Stay on the path, stay on the course as we move forward through this journey together. And everybody, as always, happy trading.